Hey traders, there are some very important key things I want to share with you when it comes to trading, and these are things that I really wish that I knew and had more focus on when I started trading. I'm sorry for the noise. I'm sitting here on my vacation in Tenerife, and I'm sitting in a lovely plaza during Christmas right now, and there's some boys playing football in the background. So I hope that you can be cool with those guys and let me try to walk through these key principles of trading. I even did some notes, so this is just basically off the script in order to talk about these things. But the first thing that is really important to understand is that the time factor when it comes to trading. The thing is that, I mean, for me, I'm like 54 years old, and it doesn't matter whether you're like 54 like me or you're 25 years old. If you can just accept that your trading is not a sprint, it's a marathon, and that you probably take out of your calendar, let's say 5 years, you won't believe how far you can get in those 5 years if you take these very, very small steps every single day of your trades. And on top of that, let's say for those 5 years, you also collect a lot amount of experience, and that experience accumulates into you getting a better and a better trader. The problem, of course, that we as human beings, especially today, we are very impatient. I'm going to talk about this as well, because the fact is that like social media and everything else has taught us to be not so patient. It has taught us the the instant gratification. And the problem is, if we are kind of brought up now with this instant gratification, that means that young people nowadays, they have sometimes a hard time waiting for the payoff of the hard work. Let me give you a good example. When I was young, at my time, there was something called VHS cassettes. So that means that if you want to have a good movie to see, you should wait and program this cassette video to record the movie that was on television, and then you can play it back. Or if you wanted to record a good song and listen to a good song, you need to listen to the radio and wait for the radio to actually play the song before you could record it to the cassette and then play it afterwards. But now in 2024, everything is so instant. Back in the days I'm talking about, it was not even possible to go to the stock market for normal people like me and trade. But nowadays, everybody with a computer and the internet can open up a brokerage account. So that's not really a problem. But let me just say, if you accept that this trading adventure that you may have started like me can take everywhere from 5 to 15 years, regardless of how old you are, you will there have the advantage and say, okay, I accept that it's not going to be instant gratification. I accept that it's going to take the time to gather the experience, as well as number two factor, because the number two factor in these fundamentals of trading is actually the compound interest. That means that if you start, let's say, with $1,000 and you make 1%, it could be per day, it could be per week, but if you make 1% of those $1,000, you get $1,010. Then the next day you make 1% again of the now $1,010, so that's now $1,020.1. And then again you make 1% of 1,020.1, then you get a 1,040.3. So that will accumulate. So if you spend enough time on this, maybe in the beginning it's going to look like very small steps, and you could say it is very small steps, but after 5 years, if you trade, let's say, 225 trading days on a year, you won't believe how far you're going to get. And that's the power of compound interest. And you need to use this to your advantage when it comes to trading. So don't be impressed if somebody post a video on YouTube saying, oh, I just made $10,000, I just made $5,000, or I just made $100,000, or I lost $5,000, because these are numbers that doesn't make any sense to you. The numbers that make sense is like, oh, today I gained, let's say, 142 points in the Dow, or today I lost 30 points in the Dow, or I lost, $1 move in the Nvidia stock. So whatever it is, that's what you need to understand, the percentages or the points or the pips, but not the dollar amounts. And as you understand now from the compound interest, that is that you will basically trade and are able to trade with the same risk all along. All right. So what what you need to do when you understand the power of compound interest, when you understand the time factor, is that you still need to train your patience. You need to train and wait for your setups. Like I did in one of my other short videos, I said, just train yourself to look for quality that is clear. It has to be clear when you look on the chart. Because in the beginning, when you start trading, it's easy to look for opportunities everywhere. But if they're not clear, if it's not quality, you don't take them. It's like if you're looking for all red cars, you will find a lot of red cars. But if you only look for Ford red cars, okay, now you're not seeing all these red cars anymore. So you have to train your brain in order to say that the reward is actually to wait for the correct setup. And the last thing that you also need to put on, and the factor you need to understand, is that you have to have a trading plan. And the cool thing is that it's, for some people, it's really hard to follow the trading plan. It's very easy to step out of the trading plan. But the cool thing about a trading plan is actually that if you write a trading plan the right way, it's actually the trading plan that is trading for you, and thereby taking away the fear, the FOMO, and all the other things, all the thoughts that can come to your head while you're doing a trade, and then can really fuck it up for you. So the better written trading plan you have, the better it's going to be for you, because now it's actually the trading plan who does the trade, and you're basically just the observer, or the one who is, how to say, executing what the trading plan says you have to do. But of course, you have to do it according to the plan in order to be able to find out if there needs to be some kind of adjustments to the trading plan. Because as soon as you step out of the plan, okay, then it's really hard for you to measure. So the point is that I'm trying to say is that you need to focus on learning how to wait. And in this case, you also need to learn how to examine your own tradings. That's actually one of the key things that I didn't understand for many years, is that in order to find out how to improve, how to get less losers, like Oliver Wheeler said, you need to crack those guys open, you need to crack the losers open, because inside the losers, the winners are. Inside the losers are all the answers to what you're doing wrong. Of course, sometimes, depending on your strategy, you just simply did the right thing, but you lost anyhow. But believe me, the more you examine your losers, the more you will find out what to do right. And that's very key important, because at the end of the day, what you will find out is that this game of trading is about to become the best version of yourself. And you will be amazed about that, because in the beginning, when everybody, including myself, when you come into the trading area, you kind of say, well, I want to be here so I can make money. But making money is one thing. Also, you can say, oh, the freedom and the Lamborghinis or whatever people say. But at the end of the day, you will find out that the only thing that's going to make you a successful trader, if you accept that the challenge is you versus you, where you accept that this is about you becoming the best version of yourself, and thereby also the best trader that you can be. I want to say thank you so much for looking and listening to this video, and I will continue to enjoy the rest of my vacation here in Tenerife. And here you can see the guy still playing football. I'm sorry for the noise. I hope you could hear what I said. Thank you very much, guys. Happy trading.